market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Fed Chair Jerome Powell signaled the U.S. is on course for an interest rate cut next month. On the tech earnings front, Meta reported better than expected sales for the second quarter. And, of course, today is also BOE Day. So to round it all up and look at the way forward for markets, we're joined by Simon Kennedy, Bloomberg Senior Executive Editor for Macro Markets. And then we also look at tech and some of the earnings with Matt Bloxham from Bloomberg Intelligence. So thank you both for joining us. Matt, we'll get to some of these earnings in a second. But what's really driving markets is Fed sentiment. I don't know whether the market is once again getting ahead of themselves, because he was quite tentative in saying, like, look, we don't have all of the tools at hand for a cut yet.
Well, I think if you hadn't been tentative, the question would have emerged, but why didn't you act yesterday? Waiting to September gives him a couple of payrolls reports, one of which is tomorrow. A bit more insight into inflation, really cement the trends that he's hoping to see before they can cut. And, of course, we've got Jackson Hole towards the end of August, and traditionally that's a location that a Fed chair uses to set markets up and set investors up for that next stage. So potentially we see that action from the Jackson Hole conference. So
why has the Fed been so tentative? I mean, I know some of the data points, maybe don't make them ready to act yet, but do they worry that inflation picks up, longer term or towards the end of the year more than they worry about jobs?
Yeah, I think so. I think you're at that transition point away from worrying a lot about inflation to worrying about jobs. They've not really it could start to look a little foolish tomorrow if the payrolls report falls away. But they're just wanting to know for sure. We had a little bit with the ECB when the ECB acted, and then everyone thought, well, maybe you acted a bit too quickly. This allows them one last round of data to really consolidate. There's not a huge chance of a policy mistake, although by waiting, although as Mohammed Deif has written on Bloomberg, to not act in September, and you're starting to get into that area. But they were criticised a lot for missing the inflation surge. They probably just want to make sure that they do have it under control, and then they can pivot to worrying about jobs.
What about BOE? So BOE is a bit on a knife edge. But again, does it really matter if they cut this time or if they wait for another month?
So that's a real knife edge. That's a lot of the economists say they'll hold, but that the risk is big that they'll act. Markets are leaning in a little bit more into a cut. We've not heard from Andrew Bailey in weeks. He took
the self-imposed purdah right before the election.
Self-imposed purdah. So there's been no signal there. But again, it's part of when you look at the central banks as a world, this week you've had a hike from the BOJ, a hold from the Fed, and if you get a cut from the BOE today, you're going to get three different paths, and that's something, obviously, if you're a trader, you like to see those differences. You can trade against them. So again, all eyes on the BOE at noon.
Yeah, and then I want to come back to BOJ, because I feel like that was a big moment actually for central banking globally. But I mean, they're firing on all cylinders, Matt, when it comes to AI and some of the performance.
Yeah, you mean Meta in particular? Yeah,
I mean Meta's done
everything.
Quite well, right?
Yeah, I mean, they are. I think obviously Meta is an ads business, and we're seeing better than expected growth in ad spending this year generally. Most market forecasts are now expecting about 8% ad spending growth. Previously, people were looking about 5% growth. So they're benefiting from that better market environment. But obviously, the investments they're making in AI, the content recommendation is driving higher quality ad impressions for them. And so we saw a big jump in revenue per ad, up 10%. And that's really kind of what's underneath the better than expected results. Now, clearly, there's still a huge amount of investment they're making in AI-based technology. We saw NVIDIA up a lot yesterday, and I think that's reflecting Mark Zuckerberg's comments about the kind of midterm opportunity and importance of AI, and the fact that they're probably spending way too much money at the moment on AI technology, but they have to, because if they don't spend now, they'll be behind the curve for that mid to long-term opportunity, and that basically every big technology company is taking the same strategy. Yeah. And I guess that underpins this the sense that there's a big spending bubble on AI now, but that's not going to slow down anytime soon.
So what are we expecting from Amazon and the likes? I mean, this is only like a week after this huge IT meltdown that the world lived through.
Yeah, exactly. I mean, I think the Amazon story is still going to be very much, kind of back to what we heard from Google and Microsoft last week in terms of demand from corporates for cloud services. And obviously, most of that cloud demand now is being driven by AI. And we saw softness last week from both those companies. I think so. It's going to be interesting to see whether we see a similar theme from Amazon, or given that they're the smaller player in cloud, they're still gaining market share. I think that's the important thing. Then obviously Apple, really a couple of things there. One, people are expecting a return to revenue growth, very slow, 2 or 3%. But any commentary around the iPhone 16 and whether they're feeling confident about the uptake of that. Obviously they announced Apple Intelligence a few weeks ago. That's probably going to be one of the big tags, selling points of the iPhone 16, and whether they think there's a strong consumer appetite for that. Some of our recent consumer survey research suggests that people aren't really looking to intelligence features as their main driver for their upgrade. It's more about kind of chip speed, battery, screen, the kind of regular things we've all kind of come to know and love.
All right, Matt, and of course, Simon, thank you both for joining us. Matt Bloxham from Bloomberg Intelligence, and Bloomberg's also Simon Kennedy in charge of macro markets. Now, join us after midday London time for special coverage of the BOE's rate decision and Governor Andrew Bailey's news conference on Bloomberg TV in the UK, on Bloomberg Radio and online. And then a little bit later, we'll also bring you our interview with the governor. That's at 4 p.m. London time. Coming up, our interview with Mary Erdoes, JPMorgan Asset and Wealth Management Chief Executive Officer. That's next, and this is Bloomberg. So there's one big show in town at the moment. Of course, it's the Paris Olympics. Now, so far, China has won the most gold medals. Hosts France are actually in hot pursuit. Now, also hoping to strike gold as a heavyweight of finance. JPMorgan's Mary Erdoes is in the French capital. The French government has been trying to woo Wall Street in recent years, with President Macron aiming to make Paris Europe's top financial hub. Now, Mary's in charge of the bank's asset and wealth management division that's been trying to push deeper internationally. Last year, the firm's private bank alone oversaw $2.5 trillion at year-end. And Mary Erdoes joins us now. Thank you so much for making the time to come on and speak to us. Mary, you're boosting your private banking services outside of the U.S. as part of this strategy to increase share globally. Where are you focusing on strategically?
Yeah, well, Christine, thank you so much for having us here. It's quite electric and exciting here in Paris, and it is a great country that we've been investing in for many years. So part of our growth strategy, given the backdrop of the world and all of the excitement that we see, there's just tremendous momentum, particularly here in Paris. We've been in this country for 150 years, since 1868, and it just continues to be a tremendous opportunity for us. It's actually our trading hub post-Brexit for the EU region, and it's proven to be just a very, very great place to attract and retain talent here. We have over 900 employees, and we continue to grow. We're nearing 1,000 in a very near term, probably by the end of the year. And it's a very pro-business environment, particularly with the leadership of Macron. He welcomed actually a number of CEOs at the beginning of the Olympics the day before, and had a number of us to lunch. And we really talked about his continued agenda and how he thinks about continuing to grow within the country and within the region. And so it is very, very strong pro-business messages that he continues to send, and gathers us all to be able to have those conversations with one another.
Mary, any worries about the election? I mean, they're struggling to form a coalition to actually find a new government. So do you expect some of the red carpet that Macron rolled out to change? Are you worried about a change in legislation, or just appetite for big Wall Street banks in Paris?
Yes, the president was very firm on his messaging, that it was steadfastly forward in all of the things that he's been doing, and that his dedication to helping the middle class and making sure that they have a better life with job creation, with solving the immigration problems that they've been facing, and a continued commitment to the climate reinvestment and evolution there, as well as AI. And I think AI is one of the most exciting things that we talked about. The room was filled with many heads of technology: Elon Musk, Joe Tsai from Alibaba. We had TikTok, Airbnb, Uber, and then, of course, JPMorgan, that finances a number of these companies, as well as the families that run some of the many businesses here and abroad. And the conversation was that this is a place that is open for business. This is a place that continues to attract and retain talent, and that the backdrop for all of us continuing to invest here and making sure that we all play our part from a business community standpoint was a resoundingly strong message, both from the president himself as well as from the business community that was there.
Mary, Citigroup, I think, was estimating that AI could add around $170 billion to the banking industry by 2028 by being more productive, but that 54% of jobs could be at risk. Do those kind of estimates sound right to you? How will you deploy AI and use AI, but also retrain some of your staff?
Yes, we have been heavy users of AI for many years. And we continue to be one of the heaviest investors in technology. Over $17 billion a year of our budget is spent on technology enhancements for our people. And we really see AI as a boost to everybody's productivity and really helping the client, helping the operations, mostly taking away the no joy work, really removing the things that nobody really wants to wake up and do every day over and over again, so that our people can be more productive on things where they're really using their thought process to help serve clients and provide solutions to many of the things that we are trying to provide. And so for us, it's just a tremendous opportunity to rethink the way that processes work, that people are interacting with one another. We have deployed it out to over 50,000 people within the company, and they're just finding all sorts of ways to deploy it. Our estimate is not that AI is going to replace many of the jobs that we have. It's really to enhance the jobs and to make them better, and we're already seeing very early signs of that.
I know you've been on a hiring spree. You're looking for private banking advisors, wealth managers across your division. What's it like hiring at the moment? Is it difficult because there are very few people? Do you have to pay them more?
We see great talent all the way around the world, even here in France, where we have just a tremendous environment with people that are serving, again, clients from all over the world, inbound and outbound. Across asset and wealth management, across the investment bank, the commercial bank, and we are even have much work ahead of us that we are doing within the retail environment, particularly from a digital perspective. And so we are really excited about the prospects for that. JPMorgan is very well known around the world for its training programs, so we often start with our recruiting at the very early ages of people in universities and colleges around the world. That's where we find some of our best talent. And so we have welcomed 2,000 college graduates just last week as they start their new careers across JPMorgan. We bring them together in New York City to get them started, and then they disperse around the world. And so we're really excited about this most recent group of new hires, and actually we think that many of them are on the forefront of how they're going to help us to deploy AI in the jobs, as you had asked before, because this is the generation of people that has grown up with it in a way that many others have not, and so it's very natural for them not to ask a question on a Google search, but actually to use AI as their own assistant or analyst beside them.
When you look at some of the market dynamics, what happens actually when interest rates start falling, when the Fed starts cutting? What does it mean for markets, and actually what kind of your clients are asking for? Do they get out of cash and into something else?
Yes, we've been spending a lot of time with our clients making sure that they don't get too comfortable in cash. As we know, cash is a long-term confiscator of your assets. It's not the place that you want to be able to compound your wealth. But it is a very comfortable place to be when interest rates have risen to a much higher level than people have experienced over the past decade. So it's a lot of the conversations we've been having to make sure that people are properly diversified across the sovereign wealth funds. We help all the way through to the individual that's investing their first time dollars in the marketplace, and we've had great success in that. I think you see the backdrop of the world being in different spots in their interest rate environments. Yeah. Europe being the first to think about reducing rates, Japan in a different situation, and we'll wait and see about the Bank of England today, and the U.S. perhaps as early as September. But making sure that people are properly diversified, making sure that they have been able to invest in some of the higher rates that we're experiencing here, and particularly if we get into an easing environment. And we will just wait and see. The data is very important to make sure that inflation isn't something that's continuing to rear its head, but balanced with the comments that we heard yesterday about jobs and making sure that we don't get into an environment of job layoffs. And so I think it's very important to weigh all of those things as they think about managing the economy.
I mean, what do your clients worry about the most? Just in the last month, we've had an assassination attempt on Donald Trump, a global IT outage. Tensions in the Middle East have also intensified.
Yes, many of these geopolitical issues weigh heavily on the minds of many investors. It's important to keep that all in perspective, that the long-term value of compounding really goes to the level of the company you're investing in, or the country you're investing in, or the commodity that you're investing in. And so keeping focused on the long term, I think there's tremendous upside in many of these investments that we're making in different companies, particularly those that are using new technologies to be able to enhance what they're doing, do it better, faster, cheaper, and getting to the consumer in a more delightful way. And a lot of those opportunities, we haven't even seen the full power of them. So there's still many things that people are thinking about investing in, all the way from the venture capital space up through the large cap space. Lots of rotations happening, but staying focused on the long term, not getting swayed by a lot of the things that happen as you get into election years, and keeping in mind that most 12-month time periods post-election are actually very positive for stock markets, except for one in the past several decades. So I think it'll end up being a good backdrop once we get through the volatility.
Mary, there's so much speculation about, Jamie Dimon playing a possible role in a possible next administration of the U.S. You know him better than anyone possibly. Do you think he'd be interested?
Oh, I think all of us from JPMorgan try to do our part in thinking of how to help governments, companies, individuals around the world. And so all of us continue to think about what's the best way to do that, and we will keep that on the forefront of our minds as we move into whatever the new administration is.
Mary, thank you so much for joining us today from Paris. Mary Erdoes, JPMorgan Asset and Wealth Management Chief Executive Officer. Much more to come, and this is Bloomberg. Still with us, Mary Erdoes of JPMorgan. Mary, what are you most looking forward to at the Olympics?
Oh, women's gymnastics, of course. My daughter Mia is on the UCLA gymnastics team and has two of her teammates competing, Emma and Jordan. And actually, Jordan just won her first gold medal 2 nights ago, and we're looking forward to the rest of the week, as well as other 40 UCLA athletes and 9 coaches here. So everything is very exciting across all of the Olympics here.
That's so exciting, Mary. And I mean, these are, young girls with such aspiration and hopes that are students. Mary, thank you so much for joining us. Mary Erdoes, they're from Paris, forward, of course, looking at the Olympics, JPMorgan Asset and Wealth Management Chief Executive. Coming up, on a knife edge, will the UK's central bank vote for the first interest rate cut since the pandemic? This is Bloomberg. Good morning, everyone, and welcome to Bloomberg UK. I'm Francine Lacqua here in London. Now, markets pricing slightly more than a 50% chance that the Bank of England will vote for the first interest rate cut since the start of the pandemic. Well, our UK correspondent Lizzie Burden joins us now from outside the BOE for a preview of today's decision. So really on knife edge, Lizzie, it's pretty exciting. Why is the vote so uncertain?
It is exciting. I'm glad you're excited as well, Francine. It would be the first cut in about 4 years, and the vote split could be 5-4. That's what economists expect. But the reason that we're on such a knife edge is because we haven't heard from the governor himself since May, because, of course, we've had this quiet period because of the election being called. We also have a new face on the Monetary Policy Committee, Claire Lombardelli, voting for the first time as Deputy Governor. We don't know how she'll vote. And then you've got such a mixed bag in terms of the recent economic data. Yes, headline inflation is back at the 2% target, but beneath that, services inflation has been hotter than expected. And if you look at that in particular, a lot of it comes down to the Taylor Swift effect on hotel prices, which if you strip out the volatility, actually you see that services inflation is coming down. So overall, a very, very messy data picture as we head into this decision. But if they don't cut today, if they don't take this opportunity to explain themselves when they've got a press conference, when they've got forecasts coming out, it could be that inflation goes up again before the end of the year and actually they miss the window.
Yeah, I can't wait to hear Governor Bailey talk about Taylor Swift in the press conference. How will today's BOE meeting feed into UK politics?
I can't wait. You've got to ask that question if you get the chance, Francine. But, I was stood here in May when Rishi Sunak was calling that snap election, and you had Conservatives really angry that the Prime Minister was handing the first rate cut over to Keir Starmer. Let's see whether he gets that today. Actually, you could see quite the awkward one for the new Prime Minister if the Bank of England changes its growth forecasts and they say that the long-term growth potential of the UK economy is below 2%, when actually he's targeting growth of 2.5%, and to some degree relying on that to spare the Chancellor this choice between higher taxes and spending cuts. The other pain point could be if we get an update on asset sales. We weren't expecting one until next month, but because of a speech by Vicky Supporter at the Bank of England last week, increasingly you've had economists saying they could announce it today, and rather than slowing down the pace of asset sales, £100 billion a year at the moment, they could maintain it or speed it up because of the interest rate risk of holding these gilts on the portfolio. That would have a knock-on effect for the Treasury because, of course, they underwrite the losses, and that would just add to the fiscal headache for the Chancellor Rachel Reeves on her budget on October the 30th.
Lizzie, thank you so much. Lizzie Burden, they're outside the Bank of England. Now, we just have a little bit of an update in breaking news. Israel saying it has eliminated the Hamas military wing heads, and this is Mohammed Deif. This is extremely interesting as we're all on tenterhooks about tensions that are at least rising. Again, it was only on the 31st, so yesterday, that Hamas said Israel assassinated its political leader, Ismail Haniyeh, in this airstrike on the Iranian capital, putting the Middle East even further on edge. So it does seem like Israel is continuing to try and eliminate not only the military and political leaders, certainly in an all-out escalation yesterday. The Iran supreme leader said that he had a duty to seek vengeance and that Israel should prepare for severe punishment. So again, all markets are looking at this very closely and will wait any further breaking news or any further announcement from either side. Let's return now to the Bank of England and bring in Bloomberg's MLive Connor Cooper and Bloomberg's opinion Marcus Ashworth to look at the BOE, to look at what data points they should be following. So thank you both for joining us. Connor, let's start off with you. When you look at, the reasons why the BOE might cut rates today, if we look at mortgages, we look at, some of the inflation, but does it actually make a difference if they cut now or they cut in September?
No, I mean, 25 basis points is 25 basis points. I think it's more the messaging that comes with the Bank of England. Yeah. They're in quite a unique position in that there's a sort of a coin flip in the decision today. If you think about the ECB, it was so well telegraphed. That rate cut landed with barely a blip in the markets. It looks like the Fed's going to be able to do the same in September. So the Bank of England's in a tricky spot. Do they cut today and disappoint some who are expecting a hold? Markets seem to think they'll cut, and I think it's interesting that pricing has been moving even this morning as well. Traders are moving these bets on rate cuts higher and higher. We see that in swaps pricing, we see that in the pound. As interesting as all that is, though, if we do get that cut, that conversation's done and we move to probably the more interesting one, sort of what's next. Some traders betting on one more cut this year, some traders betting on two. They're going to be pulling this statement, pulling the minutes apart for any sort of validation for those bets they've put on.
Marcus, what do you think? I mean, should the BOE do an ECB and just get this rate cut ball rolling today, just to show it means business?
Absolutely, and I hope and think they will. And I think the market's pretty much expecting it. There will be disappointment if they pause again, unless there's something very clear in the monetary policy review which points out there is real issues with, or even further issues with the service sector, both wages and indeed prices off the back of that. But I mean, it's their forward forecast. They still think, as we expect, that inflation will be well below 2% next year and the year after. That it's all this sort of, can they really justify keeping rates at this highest level it's been for a very long while, and will be from longer than a year at these levels after 14 previous hikes. So it's a tricky one here. I think there is certainly 2 or 3 people on the MPC who are resistant and want to see everything perfect. I think Bailey will probably bring most of the deputy governors with him and get this first little rate cut in, set the process, because we've got a lot of tax rises evidently coming at the end of October. Growth is the whole agenda for this economy, and if you don't get interest rates to follow, it's going to be very, very difficult for anyone to achieve anything.
Connor, I mean, is the worry is that, if they start cutting, then the market starts pricing more cuts. I mean, this is one of the things that we've asked the Bank of England governor last time is that in the past, it was always you cut and then you almost cut at every meeting. So is the danger that if they cut this time, then the market rolls away with, well, they'll continue cutting?
We're at a bit of a disadvantage with that question, given that we haven't heard from Mr. Bailey since, I think it was before the election. It's
been 7 weeks. We've been counting down the days.
He's never been one to sort of telegraph future moves, and I don't think he's going to change that stance today. The door will be left open for more rate cuts, I'm pretty certain of that, but the language is going to be very sort of non-committal. I think that puts more onus on other areas of the monetary policy report. The inflation forecasts are definitely worth watching. I know Lizzie mentioned risks are tilted to the upside. If you're betting on more rate cuts by the Bank of England and you see these higher inflation forecasts from the bank, maybe you start to question those bets.
Yeah, so what does it mean, Marcus, for actually pound? Does it still face downside risks no matter what the BOE does? At the end of the day, we have a new government, we have a new policy in place.
Yeah, I think pound's pretty stable and probably will take this on the chin. If the rate cut comes through, I think it's priced, and I don't expect too much sterling weakness off the back of it. I think the Fed will move to a more aggressive rates cut cycle when it does kick off in September. That will then maybe give the Bank of England more confidence. At the moment, 1, maybe 2 more. I think more like just 1 more this year. If they do cut, I think they'll cut again in November and do it quarterly, along the ECB lines. But, look, we can see a little rise from base effects in the back end of this year from inflation, but that passes straight out, and inflation is going to go back to low target. So, I'm more interested, really, what Lizzie highlighted on if they go the madness of continuing active quantitative tightening and selling more gilts and doing further things to the balance sheet, which are unnecessarily aggressive. I'll be more concerned with the effect of how that destabilises the Labour Party's agenda to try and get some form of wiggle room on the fiscal side, because if the Bank of England's forcing losses back into the Treasury, it's going to make it very, very difficult for any form of growth in this economy.
Thank you both for joining us. I'm live, of course, Connor Cooper from Bloomberg and Bloomberg Opinion's Marcus Ashworth. Now, let's get back to our breaking news story. Israel says it has killed the Hamas military head, Mohammed Deif. For more, let's bring in Bloomberg's Jumana Bersace in Dubai. Jumana, it seems that Israel is once again demonstrating its willingness to risk retaliation after yesterday targeting within a few hours the senior Hamas and Hezbollah leaders and now going after the military chief.
Yeah, that's right. And you raise a very good point about some of the very senior figures that they've taken out just in the last couple of days, Fran. But this, worth pointing out that this attack actually happened on July 13th. So it was some time ago. It is only today that we're getting official confirmation from Israel's military that it has indeed killed Mohammed Deif. That is the second in command, one of the major military leaders for Hamas, but this number two in this attack that took place on July the 13th. Of course, this follows after the assassination of Ismail Haniyeh that took place in Tehran yesterday. And so this obviously leads to the broader question of whether taking out Hamas's political leader, its senior military commander, constitutes with Israel's stated goal of eliminating Hamas's military capabilities. And the fact that they have eliminated so many senior commanders within Hamas and Hezbollah's senior commander, the right-hand man to Hassan Nasrallah, in the matter of days, lends a lot to the view that they have been achieving a lot of their military goals just in the last 48 hours.
So what does this mean for ceasefire talks?
Yeah. Well, the natural question that people have been asking is who is going to be representing Hamas at these ceasefire discussions, given now that we know that the number one and the number two in command have been taken out. You got to think that at these discussions that were taking place over the weekend, we had another roundtable in Rome on Sunday. It wasn't just those senior Hamas political figures. There was a full team speaking on their behalf. But given the events over the last couple of days, many in the region are saying that it's going to be difficult to push forward with these ceasefire discussions. And indeed, yesterday, the Qatari PM, Qatar playing a lead mediating role in these discussions, has put out a tweet saying, how can you push forward the discussions if one party assassinates a key negotiator? Now, we know that the U.S. and France are pushing forward to continue with these diplomatic discussions. But with the developments over the last couple of days, with so many of these key figures being taken out, it's difficult to see how the talks will get pushed forward. And indeed, who will be representing Hamas when those talks continue.
Jumana, thank you so much. Jumana Bersace there in Dubai. Now, coming up, we'll talk about politics, and the UK Chancellor, Rachel Reeves, gives her clearest sign yet that she's ready to raise taxes. We get the latest next, and this is Bloomberg. Now, the UK Chancellor Rachel Reeves has been giving hints that she's ready to raise taxes in her first budget, now set for the 30th of October. For more on all of this, let's bring in Bloomberg's John Stepik and Bloomberg Opinion's Adrian Woolridge. So thank you both for joining us. John, first of all, what did we learn from Rachel Reeves? So, big policies, but it's also a one-year review, because I think they're probably waiting for the OBR to come up with a figure of how much flexibility they have, right? This is uniquely British.
It is uniquely British. Personally speaking, I think it's a silly idea to have a kind of external force, sort of a watchdog like this, restricting the government's political choices. Yeah, because
it feels sensible.
It feels sensible, but what you're doing is you're baking in an approach which focuses on costs rather than growth. And if you want to be a growth party, economic growth really matters, and there's no offset to that. And the problem is that, people forget the OBR is only 14 years old. It was set up in a politically cynical move by the Conservative government to paint the last Labour government as being kind of useless with the public finances in 2010. And now, the foot's on the other foot, and Labour is using it to paint Conservatives as being useless with the public finances. I just think that overall that's a big mistake. It's a detail, but it's a big mistake.
Adrian, do you agree with this? So this is the fact that they're almost, one of the first policies, actually, that Rachel Reeves put in place was saying we can never have a Liz Truss budget again, because there's this external watchdog that will have to tick the boxes every time you have to spend?
I actually don't agree. I quite like the idea of having an external watchdog because governments will try and manipulate information. It's good to have somebody at one remove, not part of the electoral cycle, who's doing that. But what's going on here in the big picture? I think two things are going on. One is expectations management, and the other is blame management. They're preparing people for tax rises, and they're trying to put the blame of the state of the economy firmly on the previous government rather than on themselves. So amongst all the Hunt stuff and everything like that, it's about those two things.
I mean, does it matter? They won with a big majority.
Yes, it does matter.
For 5 years. It does matter.
It does matter because I think it's a big but a fragile majority. They got 34% of the vote. Britain is not in love with this party. They're going to have to do some very, very difficult things. So shifting the blame onto the previous government is important.
John, so, the Chancellor has stood by pledges not to raise income tax, VAT. Where can she raise taxes?
Oh, yeah, so she's ruled out about 75% of the tax base with that, so you get another 25%. And it's mostly going to be, I would imagine it'll be capital gains tax, inheritance tax, and potentially pension reform are all the things that she might be looking at. All of them come with their own challenges. Obviously, the problem with pension reform is as soon as you touch that, you start touching on public sector pensions as well. It's very difficult to change those rules. So although it looks as if you could get a large amount of money by reducing the amount of tax relief, for example, that people get on pensions, it would also open a massive minefield. So I don't think she'll want to do that. So I suspect the kind of big lifting will be done by some tweaks to inheritance tax and also capital gains tax. That's the one that we're more like, it's hard to know what she'll do, but there are lots of things she could do.
Yes, and what does that mean? I mean, again, if she goes for capital gains tax, inheritance tax, she also hasn't ruled out pension reform, but you kind of argue that wouldn't be the one that you would touch. What does it mean for the business community? They're trying to get private money into the UK. If you go after, for example, capital gains tax, does it change the dynamics?
Well, the great Labour Chancellor, Dennis Healey, once said he was going to tax the rich until the pips squeak. And they're moving in that sort of direction, that it's going to be, richer people, certainly Middle England, that are going to see the inheritance for their children, their capital gains, really affected by this. Ideally, you want a tax system that is, or tax rises that are as broad as possible, raise money from as many different people as possible. These are going to be very targeted on some quite vulnerable groups that could leave, groups that could change their behaviour and activity in the light of incentive, and groups that will start squealing very, very loudly.
So does that, and again, John, I mean, they're business friendly. They say they're business friendly. So how do they calibrate this?
Well, I mean, I agree with Adrian, because I have to say, I thought the tone of the statement the other day was very, very, very much not, growth and peace and light. The other thing, that, they pushed through the VAT in private schools starting from the next term, not even the next academic year. And I think that's a sort of sign of the direction of travel. There is an ideological tone here, which is very much swinging back towards the Labour that everyone is kind of worried about in the business community.
There's a vindictiveness here that Tony Blair was so successful because he was always nice to Middle England, to the wealth creators, to the people who saved. And there seems to be here a dislike for these people, both in terms of where they're putting the houses, for the new growth. They all seem to be in the shires, in the capital of Middle England, in terms of the school policy, in terms of the hit on inheritance. So it's not quite going back to Corbynite Labour, but it's more Corbynite than you'd expect. There's a class animosity here that's very dangerous.
But, I mean, dislike is a very strong word if they need to find the money somewhere and there's nowhere else to find it. Is that fair? Or could they find it somewhere else?
One of the problems was that they put themselves in a sort of box. They said, well, we don't need to raise the big taxes because all the great things that we're going to give you will be paid for by growth. Well, growth takes a long time to get, so you're then suddenly left scrabbling around for other sources of income, and they happen to affect a certain section of the population, which is rather important to our wealth creation.
How quickly can growth? I mean, there was that 2.4% target, 2.5% target, actually, that Keir Starmer said in the campaign pledge, which they didn't repeat. Is that, just a far-fetched number?
I mean, I think with that one, he got put on the spot and just pulled a number out of thin air. To be fair, I've read, very optimistic forecasts from, like Simon French over at Panmure Gordon put out a note the other day that said that actually conceivably we have a good tailwind UK growth could hit 2.5% as early as next year. And, you know, UK, the irony about this is that the economy is actually in a very good condition. And the problem is we've got a new government in who's keen to, who's sort of trying to strike a balance between saying that the last lot was so disastrous that we're in real trouble. But the problem is if you keep saying we're in real trouble, you're not going to get people investing and spending because everyone's now really worried about what is going to come on October the 30th. So I think they need to have a think about the way they're talking about the economy now.
But again, there is expectations management here, so she might be able to say things are a bit better than we thought. So we can be a bit nicer.
How much does an interest rate cut help? A lot, even if it's 25 basis points? I mean, today we could see it, or September?
I think confidence-wise, In terms of your actual mortgage, it makes no odds, but in terms of
the direction of travel, I think it matters.
And that matters for who? For companies, for refinancing, for what asset management? If you do 25 and then stop at 25 basis points, what happens next?
I mean, I suppose it's more about what markets expect. And so, you get 25 and then maybe you get another 25 by the end of the year. But then it also then does depend on what happens to inflation and economic growth. But at this point, the cut is more, look, the cuts are coming, and what that gives kind of confidence to businesses and consumers.
I just think it is direction of travel. If things are going to get better in the future.
Okay, thank you both for joining us. Adrian Woolridge there from Bloomberg Opinion and Bloomberg's John Stepek. Now, be sure to subscribe to John's award-winning daily newsletter, Money Distilled, and I would also check out Adrian's very cool daily columns. Coming up, London Stock Exchange Group Chief Executive Officer says the IPO pipeline is promising. We'll hear more from our interview with David Schwimmer. This is Bloomberg.
This notion that private equity buying companies is a threat, I don't think captures the full picture. I think it's part of the natural ecosystem that we have. You want companies to list, go public, grow. Some of them will stay public, some of them will be acquired. That's all part of the natural evolution of the system. I think the reason that this narrative has picked up over the last couple of years is that on a global basis, there has been a pretty light calendar in terms of IPOs. But that's, I think, due to a lot of other things, whether the macro environment, some of the geopolitical instability. So, as I said, the IPO pipeline's looking encouraging, and as you get that IPO pipeline coming back, it'll be seen as sort of the natural ebb and flow in the markets. Companies go public, companies get acquired, and that's how it should work.
Well, that was the London Stock Exchange Group Chief Executive Officer on Bloomberg earlier this morning on the IPO market in London. Now, Israel says it's confirmed that Mohammed Deif, Hamas's second in command, was killed in a strike in Gaza on July 13th. Israel's military had previously said it was all but certain he had died in its attack in the city of Khan Younis. Hamas denied at the time that Deif was dead and said Israel's operation against him had killed around 100 other people. So we'll continue, of course, keeping an eye on this big breaking news story. This is Bloomberg.